I'm rolling with a gold on a 1 hour time frame today. We're working with the 200 EMA and parabolic SAR as our first indicator, and trust me, once you get this dialed in, it'll gives you a solid read on where the market's heading. So here's how you get it going on TradingView. Pop open the indicator section, it's that little button up top. In the search bar, type in 200 EMA parabolic SAR and hit enter. When it pops up in the results, click it to slap it onto your chart. Now, this indicator's got a bunch of moving parts, but we're only messing with a few to keep it clean and useful. Head to its settings, click the gear icon next to the indicator name, and the inputs tab. First thing, turn on the show 21 EMA option. It's a handy short-term signal we'll use. Then adjust the MA fast length to 14. That's your quick moving average to catch every shift. Set the MA mid length to 27 for a bit more stability. And the MA slow length to 180 to track the bigger trend. Next, tweak the PSAR ATR to 0.002. This tightens up the parabolic SAR dots so they're more responsive. Scroll down a bit and set the ADX smoothing to 21. And the DI length to 21.2. These smooth out the noise and help you spot momentum. Now, flip over to the Style tab, turn off everything except the long and short options plus the plot option. That way your chart stays clear, just showing the signals you need. Oh, and before we add the next indicator to juice things up, do me a quick favor and hit that like button and subscribe to the TradeGenius YouTube channel. Why? Because every day we're dropping simple, profitable strategies like this one to help you stack those wins. So let's talk about making sure we're acting on the right signals. We're bringing in another layer of confirmation. For this, we're going to use a really interesting indicator called STC. You might see it's listed as STC, a better MACD. Now, let's actually get the indicator loaded onto your chart so you can follow along. Go ahead and click the indicators button. Then in the search tab, just type in STC, a better MACD. And then in the results list, you'll want to click on this specific one right now. Okay, awesome. You should have the STC indicator setting on your chart now, but here's where we start making it work for us. We need to tweak the settings. The default setup isn't quite what we need for the specific approach we're talking here. Get these settings right is really key. So go ahead and find the little settings icon for the STC indicator. It usually looks like a gear icon, or you might need to double click on the indicator line. Click on that to open up the settings window. You'll probably land into the inputs tab first. That's where we'll make our changes. Look for an option called length. We're going to change the number there to 14. This adjusts the core calculation period. Next, find the fast length setting. Let's change that one to 50. And right below it, you should see a slow length. We're going to set that one all the way up to 200. Now, let's pop over to the Style tab in the same settings window. You'll see a few different visual options here. Find the STC option. We definitely want that to be easy to see, so go ahead and pick a color that stands out to you. Maybe make it a little thicker or increase the opacity. Make it pop. Then, for all other options you see in the Style tab, any extra lines, backgrounds, things like that, we're going to turn those off. Just uncheck the boxes next to them. The reason we do this is to keep the chart clean and simple. Now, let's add a couple of key levels right onto the STC window itself that will act as our triggers. We just need two simple horizontal lines. Go ahead and draw one line across at the 60 level, then another one across at the 40 level. These lines are super important. They create the zones that help us confirm whether a trade signal is worth taking based on our strategy. Alright, lines are in place. Perfect. So let's talk about how we actually use the setup to find potentially profitable trades. The absolute first step before anything else is figuring out the overall market direction, the trend. We need to know if we should be looking to buy or sell. Remember the moving average line we have on our main price chart? That's our guide. If the price candles are generally staying above the moving average line, we consider the trend to be up. And when the trend is up, we only focus on finding opportunities to buy or go long. Any signal telling us to sell, we just ignore them for now. Stick with the trend. Now we have a buy signal. We don't just automatically hit the buy button. That's where our special tuned STC indicator and those horizontal lines comes into play. We glance down at the STC window. For us to consider this a high potential buy signal, we need to see the STC line dipping below the 40 level we just drew. Why below 40? Think of it like waiting for a little dip or pullback within that bigger uptrend. When the STC drops below 40, it suggests the momentum might have temporarily stalled or pulled back, potentially giving us a better entry price just before it resumes its upward journey. So if all three conditions line up, that's our signal to enter a long trade. Once we're in, how do we manage it? For a stop loss, a logical place is just below the most recent swing low and the price, the little valley price made before moving up, that defines our risk. For a profit target, we aim for a reward that's twice our risk. So measure the distance from your entry to your stop loss, multiply that by 2. And set your target that far above your entry. That gives you a solid 1 to 2 risk to reward ratio. Now let's look at a couple of quick examples to see why this STC filter is so helpful. Check out this buy signal right here. See how the price is above the MA? So the trend is up, but look down at the STC. It's not below 40 when the signal appears. According to our rules, that's not a valid entry. And look what happens next. The price pulled back significantly. We avoided that potential loss by waiting for the STC confirmation. Here's another one. Trend is up, buy signal fires. But again, the STC isn't below 40, not our trade. And sure enough, the market dips right after the signal. But now, look at this next example. The trend is clearly up. We get the buy signal. And look, the STC line is below 40 level. That's our green light. We enter the long position, set our stop loss below the recent swing low, and aim for 2 times the risk. And watch the market moves nicely in our direction pretty much right after we get in. That's the kind of accuracy this filter can help provide. Okay, so what about selling or shorting the market? It's essentially the same logic, just flip upside down. First, we need a clear downtrend. Price has to be trading below our moving average line. In a downtrend, we only look for sell signals. When a sell signal appears, we check our STC. This time, for confirmation, we need the STC line to be above the 60 level. This suggests price might have rallied temporarily within the downtrend, giving us a potential better entry before it heads lower again. So, the stop loss goes above the recent swing high and the target is again twice the risk. It really comes down to using the MA for the overall trend and waiting patiently for both your entry signal and the STC confirmation in the right zone. Discipline is key here.